Hey guys, welcome back. So today in this video we're going to go through FTR or fail to return, and we're gonna discuss how you can spot and draw FTR zones and how they can be useful for you. After that we're gonna go through FTB, that is first time back, and we're gonna see how FTB points are made and how you can spot FTB points and how you can use them in your trading. And after discussing FTR and FTB, we're going to go through an example on the charts. And after going through FTR and FTB, we're going to go through an example on the charts, which will help you understand them better. After going through the example, we're going to define different types of supply and demand zones and how those zones are made and how you can spot them. And in the end, we're going to study how you can spot strong FTR zones. So you know here there are hundreds of FTR zones being made in all those currency pairs and stocks and everything, but all of those FTR zones are not tradable. So you have to look for strong FTR zones so that your probability of winning a trade is very high. And we're gonna study that in the end of video because we will be discussing the basic concepts throughout the video. And I would highly encourage you to pay close attention as we go along in the video so that you will be able to understand how you can spot strong FTR zones better. So let's get on with the video. So what is FTR zone? FTR basically means fail to return. Okay, so here we have, let's say we have a support and the price movement here. So normally at support, when price touches the support, it normally returns back. Okay, but at FTR zone, what happens is here the price comes down and it just breaks through the support, and instead of returning back, it gives a small pullback and then continues its trend. So what has happened here is that price has failed to return, and this minor pullback zone is basically our FTR zone, that is fail to return zone. So let me draw FTR zone for you. So this zone here is basically our FTR zone, and let me color it. So this here is basically the FTR zone, and this zone that we can see here is basically the base zone. We can see the base zone in lower time frames, and it really helps us to take pinpoint entries and increase our risk reward ratios. So you can see that how you can draw FTR zone. Again, let me repeat. So at support, what happens is the price comes, touches the support, and should return back. But here what happened is the price just broke through the support, and instead of returning back, it gave a little pullback, this one a little pullback, and then it continued its trend. Okay, so it made an FTR zone here. Now let's discuss what is FTB or first time back. So here you can see an FTR zone drawn, and when the price touches the FTR zone for first time after making the FTR zone is basically our FTB point or first time back point. So here you can see this is our FTR zone, and after going bullish, the price becomes bearish and touches the FTR zone here. So this is basically our FTB point. Okay, and this point is very helpful because it helps us to take our positions. So the point at which the price touches the FTR zone for the first time is basically our FTB or first time back, and when it touches next or the second time, that will be called as FTB2. Okay, so a first time back is nothing more than just the price touching the FTR zone for the first time. Now let's go through an example on the charts so you can understand it even better. So here we are in the charts, and what we need to do is we need to look for a support. So here I can see one support. Let me just zoom in so that you can see clearly, and let me increase the height of the candles. So let's draw our support here. Okay, and This is basically a good support because you can see the price touching at multiple points and reversing back. So now when we go into lower time frame, let me go to 1 minute time frame, and when we go back to our support region that we just saw, so here is basically our support that we had drawn in 15-minute time frame. Now I'm at 1 minute time frame, and you can see that this is really good support, okay, because the price is touching and reversing back, touching and going back, and again touching and going back, and you can see that here as well. So if I zoom in, and now we're going to look for our FTR zone. So here you can see that the price broke through the support, and then it just gave a minor pullback instead of returning back, just like here. Here you can see the price touching and going back, okay, but here what happened is the price broke through the support and gave a minor pullback instead of returning or reversing. So this is basically our FTR zone. This minor pullback is basically our FTR zone. So let me draw the FTR zone here. This zone is basically our FTR zone, and if we draw this forward, we should be able to see the FTB or first time back point as well. So let me just go ahead and draw this to here. Let me put it aside. So you can see at this point, after making the FTR, the price touches the FTR zone here at this point, and if we zoom in, we should be able to see that more clearly. So here the price is touching, and this point is basically our FTB point that we discussed previously, okay, and let me just zoom in even more. So this point here is basically our FTB point. Now how we can use FTR zone is basically whenever there is FTR zone, the big investors and banks place their pending short orders if the FTR is at support. So here what they have done is they have placed their short orders. So we can do the same because we know the price is going to come back in order to pick those orders at FTB, okay. So what we need to do after we support an FTR zone is we need to place our pending short orders or sell orders here, and we need to put our stop loss just above the FTR zone so that it can cover the spread as well, okay. And here we can draw a base zone as well if you want to. So let me just go here and take the rectangle, and this zone here is basically will be our base zone. Let me change the color of this. So this zone here will be our base zone, and what base zone does is it allows us to take pinpoint or exact entry, and it helps us to increase our risk reward ratio as well if we take our order or put our pending order at base zone, okay. Now we're going to go through different types of supply and demand zones, and here you can see that the price making a bullish candle and going up, and in between there is a very small candle, and after that the price is becoming bearish. So this is basically our supply zone, because what happened here is there was enough supply that it made the price go bearish, and this is basically our supply zone. We have a bullish candle, a small base zone or base candle, and the bearish candle. This is basically our supply zone, and similar to that, inverse of that is basically our supply demand zone, okay. What happened here is the market was going bearish, and then there was sideways movement which made the base candle, okay, and then the price rallied up, and this is basically our demand zone because there is drop, base, and rally, okay. And this zone, which was our supply zone, was basically rally because the price went up. Then there was base zone and drop, okay, rally, base, drop. This makes the supply zone, and drop, base, rally makes the demand zone. Here we can see the price going bearish, okay, and then making a base zone and then again going bearish. So this is basically our drop and base zone and again drop, and this is also a supply zone. Okay, so drop, base, drop makes a supply zone, and here we can see that price becoming bullish and then making a small base zone and again continuing its bullish trend, and this is our demand zone. And this will be also called as rally because the price was going up, then making a sideways movement, making the base, and then again continuing its bullish trend. So basically rally, base, and rally, and this will be our demand zone. Okay, we have also made a dedicated video about supply and demand zones, and I'll put the link in the description for you to go through the supply and demand zone in detail in our separate video. So now let's try to understand how you can support strong FTR zones. Okay, so let me just zoom in a little bit here, and so here we can see the price movement in the form of swing. So basically this is our swing and this is our low. Okay, and here's another swing level and this is our swing low. So when the price when there is a support at swing low, as you can see here, there's support at swing low. Okay, and the Fibonacci 50 and the swing low levels match each other at support, and if there's FTR zone at that level, that will basically be very strong FTR zone. Okay, so again, if the swing low and the Fibonacci 50 are at the same level of support and there's an FTR present at that level, will basically be a strong FTR zone, as you can see here. So I hope you liked this video. If you have any questions, please comment down below and I'll love to answer them. In order to show your love and support, please subscribe to our channel and like the video. You can also visit our website www.forexb.co in order to learn more about price action, and see you in the next video. Thank you.